Forgive me if I sound like a broken record, but with equities down 30, 50, and as much as 70%, Mr. Market has presented another gift. Buy the dip. Welcome back to Rockstock Channel and our first video in more than 2 months. For those of you who may be unaware, we took this long break as a result of an unimaginable tragedy, the murder of my wife, Shoya Gal, on April 16th. I would like to thank the many viewers of this channel and my followers on Twitter who I may not know personally, but have reached out with messages of support for me and my family. Please keep them coming. It means a lot. My business partner and Rockstock Channel co-host Rodney Hooper has been staying with me the past 2 weeks in Bull's Lair, from which I usually record these videos. It's the first time I've had the opportunity to see him in person in over 2 years. We've covered a lot of ground, both personally and professionally. We attended the Benchmark Minerals Intelligence Giga USA event in Washington, D.C., and participated in the Fastmarkets Lithium and Battery Materials Conference in Phoenix, where we handed out these great hats. Our first videos this week include repurposed recordings from presentations at the Fastmarkets event. And our first interview is with Benchmark Minerals' Simon Moores, who has been exceptionally gracious and generous as we re-enter the lithium commentariat. Rodney and I started this year with an aggressive rollout of Rockstock Channel content. We became eligible for monetization earlier this year following our videos suggesting if Tesla were to buy Albemarle, it would be game over. As I seek to rebuild my life, I plan to double down on producing content and growing our audience. As a stretch goal, we are targeting 20,000 Rockstock Channel subscribers by this time next year, more than 5 times our current 4,000 subscribers. Please help us by not only subscribing, but telling all your investing friends to subscribe. They will thank you for helping them to learn more about what could be one of the best secular investment themes of our time: upstream raw materials powering the energy transition. This sector is very immature, niche, and underfollowed by institutional investors and sell-side analysts. Like Tesla several years ago, retail investors who educate themselves about this sector generally and individual companies in particular have an opportunity to accumulate life transformational wealth. The scale of investment needed in mining and refining lithium, nickel, graphite, and other raw materials will be measured in the trillions with a T. A long-term perspective and time horizon is required for this multi-decade cycle. Deglobalization and the necessity of diversifying and reshoring supply chains has now become a big thing, alongside clean energy technologies to address climate change. When I graduated Columbia Business School in 1997, I had zero knowledge of or passion for industries in which workers literally get their hands very dirty. NYU Business School's marketing professor, Scott Galloway, has informed many of my life views over the past few years. This snippet on career passion continues to resonate.
If someone tells you to follow your passion, it means they're already rich. And typically the guy on stage telling you to follow your passion made his billions in iron ore smelting. Your job is to find something you're good at and then spend the thousands of hours and the willingness to break through hard things to become great at it. No one grows up thinking, I'm passionate about tax law, but the best tax lawyers in this nation fly private and have a much broader selection of mates than they deserve.
In November 2019, at Benchmark's flagship Cathode and Anodes conference in Los Angeles, Priscilla Barrera of Investing News Network asked me this question.
Considering what you're expecting will happen in the 2020 decade, if you had to define that in one word, what would it be and why?
I'd use the word velocity. The speed with which, these markets move down and up, it's probably going to continue. Much as I'd like it to be kind of sustained, I think it's going to be a function of these markets. It's going to be boom bust. We are now halfway through 2022, a period of extreme volatility. As recently as mid-May, many lithium producers were at or near all-time highs, following eye-wateringly high spodumene, lithium carbonate, and lithium hydroxide prices. But in the past 4 to 6 weeks, lithium, graphite, and nickel equities have been smashed. Interest rate fears, which largely hit long-duration tech stocks, have been supplanted by recession fears, which have now hit cyclical, value, and commodity stocks as well. Accompanying my end June lithium scoreboard, I referenced U2's 1983 live album, Under a Blood Red Sky. I'm recording this today on July 3rd, Sunday, Bloody Sunday. I'm not a financial advisor, and nothing on Rockstock Channel should ever be construed as investment advice. But I expect those holding lithium equities today or have available cash to deploy into this latest retracement will be singing a more positive tune by New Year's Day. Thank you, Fastmarkets, for having both Rodney and me back to speak at the Lithium Industries flagship conference. It's great to be here and see again so many old friends and a great number of new people. Record attendance, over 600 registrants here. I'll share today, as always, my current thoughts on lithium capital markets. My original title for this presentation was a double entendre about lithium's pharmaceutical applications and China and ex-China geopolitics, the cure for disorder bipolar, securing sustainable North American lithium supply. But while under the influence of the WHO at Madison Square Garden with my son on what was meant to be my 22nd wedding anniversary, I had an epiphany for a different double entendre. Inspired by the Declaration of Independence ahead of July 4th, and offering some perspective 10 weeks after experiencing a most unimaginable tragedy. Taking stock, life, lithium, and the pursuit of happiness. We hold these truths to be self-evident. Not all lithium is created equal. Commodity equities follow commodity prices, sometimes with a lag. Go long what China is short. Go long what Tesla is short. Tesla's Gigafactory 1 in Nevada was a watershed event in 2014 and 2015. It prompted Goldman Sachs to call lithium the new gasoline in December 2015. Lithium boomed from 2015 to 2017, what I've called almost famous Lithium 2.0. Elon Musk has often dismissed lithium, the salt on the salad of battery materials. But in Tesla's Q1 conference call on April 20th, he and Drew Baglino mentioned the word lithium a full 27 times. Compared to nickel 4 times, iron twice, and graphite once. That's a pretty salty salad. These were the most bullish comments on lithium I've ever heard or read. 4 weeks later, in mid-May, Albemarle, SQM, and other producers were at or near all-time highs. Lithium is the new software. Do you like minting money? Well, the lithium business is for you. Last June, as lithium prices were rising but lithium equities were falling, I suggested Mr. Market had presented a gift and began my higher love narrative in homage to Steve Winwood in 1986. I reiterated the theme at Fastmarkets conference last September and in a second video with Rodney in February of this year. Higher love again. Forgive me if I sound like a broken record, but with equities down 30, 50, and as much as 70%, Mr. Market has presented another gift. We're here at Fastmarkets, June 2022. The song remains the same. Buy the dip. I got involved in the lithium industry in 2009, some 13 years ago. Obama's post-global financial crisis stimulus helped catalyze what I call Lithium 1.0. Throughout all these years, the lithium industry has been and remains relatively small, but it always seems to have a disproportionately loud voice from investment banking analysts, journalists, government officials, creating fear, uncertainty, and doubt, causing equity market volatility. Big mouths, too little lithium. Greenfield projects from the Lithium 1.0 period at Orocobre, Galaxy, and Neo Metals have turned out to be great successes, but they experienced many operational and capital markets challenges over many years. As financing for junior lithium miners dried up for much of the 2012 to 2015 period, incumbents Tianqi and Rockwood took over the world's best hard rock lithium mine, Talison, in 2012 for $1 billion. Albemarle bought Rockwood for $6.2 billion in 2015, over 15 times EV to EBITDA. Both of these deals were considered very richly valued at the time. As the Lithium 2.0 boom was busting, West Farmers paid $550 million cash in 2018 to get 50% of the Mount Holland project in Western Australia, 5 times what SQM paid 18 months earlier for their 50% interest. Into 2019, Albemarle seemingly overpaid to become partners with Mineral Resources at Wodgina and Kemerton. At the Fastmarkets 2018 conference in Santiago, I took to the mic and I impolitely asked Tianqi if the $4.1 billion they paid for Nutrien's 24% stake in SQM at $65 a share for a minority stake with no control, no new supply or offtake would have been better invested to finance new supply from 5 to 10 lithium developers. I still think that would have been a better idea. But today, Tianqi is sitting on a 50% return on paper. Not too shabby. Lesson number 1, even if you pay up at market tops for quality producers and development projects, you can reap high returns. But you need patience, long-term perspective, diamond hands. Lesson number 2, if you could deploy new capital during big retracements, you'll do much, much better. The huge lithium sell-off in the last 6 to 8 weeks has nothing to do with the positive fundamentals of the lithium business and everything to do with inflation and interest rate worries, causing a risk-off repricing in more richly valued speculative investments that have far less strong fundamentals than lithium. I take cues from Pilbara's 7,000-plus pre-auction bid for spodumene. As you'll hear shortly from Rodney, RK Equity believes lithium prices are more likely to be higher than today, later this year or next. Higher love again is coming. Buy the dip. Producers, near producers, and developers with cash balances above $100 million are likely to rebound first. This is our Mr. Market scoreboard. In green are those developers with $100 million more or more. And now, some thoughts about life. Life is short. RK Equities client, Atlantic Lithium CEO Vincent Mascolo, died suddenly in March of a heart attack. 53 years old, same age as me. This news hit me very hard, and I found myself thinking about it daily. I discussed it with a teary-eyed Stu Crow in our vodcast in early April. I had spoken to Vince about 24 hours before he died. He was in an ebullient mood, planning a trip to the U.S. 8 years' worth of hard work was finally coming together. A strong partnership and full funding with Piedmont Lithium, a rapidly advancing and expanding resource in one of the few areas of the world where competition for Atlantic's remaining 50% project interest would be welcome from both China and ex-China. The next day, it was all over. Lesson number 3, enjoy each day as if it may be your last. In mid-April, I was forced to engage a lawyer as I had become a person of interest. After a few conversations with me, he observed that I'm an out-loud thinker. As I take one day at a time, and as I look forward to Howard Klein 2.0, a second life, in which I am now father and mother to 2 great boys, I find it constructive, if painful, to look back with 20/20 hindsight. I have found it therapeutic to share honestly my thoughts with friends, close and distant, privately and publicly. 27 of my 53 years with my wife, Orshoya Gal, was like Led Zeppelin 1. Good times, bad times. Now, dazed and confused, what is clear is that we suffered greatly from communication breakdown. Scott Galloway's books, blogs, and podcasts have caught a fair bit of my mind share over the past years. I read his Algebra of Happiness in early COVID days. His most recent article, Notes on Work, contains some prescient insight. Work as a source of self-esteem and a means to feel connected. Opportunity, relationships, and mental health can be difficult to recognize, as often they come disguised as work. As I pursue happiness in my life, it is my lithium work and the opportunity and relationships I've developed with many in this room that I'm finding critical to maintaining strong mental health. My dad is 91 years old and has managed his diabetes for decades. I've been following his no drinking, no smoking, and meditation routine for several years, plus yoga and swimming, but no diabetes. I expect my boys and me to live very long lives. 53 is the new 35. As I begin my new beginning, Howard Klein 2.0, suddenly no longer almost famous, I take a cue from Led Zeppelin 2. Thank you, and a whole lot of love to my many friends in the lithium community for your outpouring of support for me and my family. And now it's time to ramble on. Are inflation and rising interest rates good or bad for commodity equities? For lithium? I started RK Equity in 2002 when Robert Friedland thought I could help him promote Mongolia copper. At 34 years old, for the first time in my then 12-year career, I was at the right place at the right time, the very beginning of the China-led supercycle. During the 4-year period from June 2003 to June 2007, the 2-year Treasury yield quadrupled from 1.25 to 5%, 375 basis points. BHP, to pick one bellwether big-cap miner during this period, quintupled from less than $7 to $35. During the 27-month period from July 2016 to October 2018, the 2-year yield quadrupled again, from a lower base of 0.67 to 2.86, 219 basis points. BHP rose 72% from $23 to $40. The Lithium 2.0 boom was in full swing in this time frame. In contrast, from May 2011 to August 2016, a 5-year period where rates remained below 1%, BHP fell by more than 50%, from $62 to $23. We live in unprecedented times, and no one could say with certainty whether these correlations of interest rate to commodity equity performance will hold. Are we about to experience 1980s-style stagflation led by oil and commodity price shocks? Structurally higher costs due to deglobalization and developing less China and Asia-focused supply chains? Or is Cathie Wood right that disruptive innovation is fundamentally deflationary, most notably reflected by Elon Musk's achieving his core goal for Tesla to become the world's greatest manufacturing company? Time will tell, but it looks to me that rising interest rates are not an impediment to rising lithium equities. Lucky Lithium, go long with Tesla short. Again, words spoken in April by Elon and Drew Baglino were more bullish lithium than anything they've ever said before. Mining and refining lithium is a limiting factor, the biggest cost growth item. Without big increases in extraction and refinement, prices will be driven to high levels. Into 2030, we need everybody to do more in the lithium space. We're going to have to help the lithium industry. We'll have some exciting announcements in coming months. A Declaration of Independence, Elon's big, hairy, audacious goal. Rodney and I agree with Joe Lowry's characterization of the 2020s as the Lithium Decade. Can North America grow from just 5,000 tons to 1 million tons of supply over the next 10 to 15 years? That would equate to about 30% of the 3.2 million global lithium market Albemarle has forecast will hit by 2030. At $30,000 to $40,000 capital intensity per ton, this will require $30 to $40 billion of investment. Each of the regions and some of the companies in the USA and Canada on this slide can produce 50 to 200,000 tons or more. We should all be rooting for all of them to succeed. Likewise, newcomers like Winsome Resources, Green Technology Metals, and Emily Hirsch's Luna Lithium. What's happened to lithium equities has nothing to do with lithium fundamentals or Goldman Sachs peddling lepidolite short stories. It's all broad macro, for which George Soros comes to mind. The alchemy of finance. The concept of equilibrium is very useful. It allows us to focus on the final outcome rather than the process that leads up to it. but equilibrium has rarely been observed in real life. Market prices have a notorious habit of fluctuating. Allchem guided earlier this month a 14% uplift to Q2 carbonate price. That is $40,000 a ton. Spodumene expected to be $5,000 a ton. Gross margins at both Olaroz Carbonate and Mount Catlin Spodumene at these prices are approximately 85%. Lithium is the new software. At approximately $5 billion market cap, Allchem is trading at less than 5 times next year's EV to EBITDA. Lithium prices are likely to remain stronger for longer. Allchem has both price and volume upside in the medium term. The stock is an easy double, in my opinion, and it won't be expensive if it rises that much. As an advisor to Western Lithium and Lithium Americas years ago, I was told the best advice I ever gave was for them to put on their big boy pants and list on a U.S. exchange. Lax massive trading liquidity on the New York Stock Exchange and savvy market timing enabled them to raise $400 million in equity last January at a then peak valuation after receiving a record of decision on Thacker Pass. Lack further took advantage of buoyant capital markets in Q4 last year, top-ticking a convertible bond that enabled the company to repay much higher interest-bearing secured debt to Ganfeng. After 13 years, Lack investors will see in 2023 the first fruits of 49% Minera XR carbonate cash flow. Piedmont Lithium, now 6 years old, will likewise soon bring on production and cash flow from what might be the world's best offtake agreement from North American Lithium with Sayona Mining. From next year, Mr. Market will begin to compare LAC and PLL's quarterly production and profitability and their multi-jurisdiction, multi-asset businesses to Allchem and other Tier 1 producers. I look forward to both companies undertaking quarterly conference calls like all other lithium producers and hopefully be a bit more transparent, as David pointed out, with volume and price. Piedmont's collection of 4 plain vanilla spodumene and hydroxide projects are trading today at just $750 million market cap, below the $825 million Rio Tinto paid just 6 months ago for a technically challenged brine asset in Argentina that one of the Argentine investors earlier gave his opinion on political conditions in that country. In my opinion, PLL can triple from today's levels without giving any value to its flagship Carolina Lithium project. Not advice, do your own research. Big oil, big auto, and big government are starting to write checks. Koch $100 million to Standard Lithium, ExxonMobil affiliate Imperial $5 million to E3 Lithium, Stellantis €50 million to Vulcan. The U.S. government, the DOE loaned to Syrah for graphite processing. The DOD granted Linus for rare earths processing. Big money for big lithium is likely coming soon. You're about to hear from Jaitin Khanna from the Department of Energy. I expect he and his boss, Jigar Shah, to soon take a Jimmy Page from Led Zeppelin 1 and 2. Bring it on home, Piedmont Lithium, Lithium Americas, and Ioneer. Your time is going to come. If you leave this presentation with nothing else, remember, not all lithium is created equal. Commodity equities follow commodity prices. Go long with China's short. Go long with Tesla's short. Around the same time Elon Musk announced his $43 billion bid for Twitter, he said the following during Tesla's Q1 earnings call. We're going to have to help the industry. Exciting announcements are coming soon. Rockstock Channel's most popular, most viewed video to date was Elon Musk's master plan number 3. If Tesla buys Albemarle, it's game over. Please subscribe to Rockstock Channel on YouTube and follow @LithiumOnRocks on Twitter. Please note, RK Equity is not a financial advisor, and nothing I've said should be construed as financial or investment advice. This slide highlights clients we've worked with in the battery material space over the past 13 years. This disclaimer highlights all our current clients and equities we hold interest in. Thank you very much for listening, and again, for all your support for Rodney and me and my family.